Welcome to GRE. I'm your host, Keith Weinhold. Is the economy really coming back? What's the one thing that could crash the housing market even more than expiring forbearance? It's something that no one seems to be talking about. Where is inflation headed? What surprising investment did I personally make recently? And what's an important part of your investor mindset that you probably haven't thought about before? All today on Get Rich Education. The people that our listeners can't stop talking about are Ridge Lending Group, NMLS 42056. They've provided GRE listeners with more loans than anyone, and it's where I got my last few loans. They finance single-family income property up to 4plexes. They're the number one lender for beginners and veterans. Start your pre-qualification, chat with President Chaley Ridge personally, and get your custom plan for expanding your cash-flowing portfolio. Start at ridgelendinggroup.com. A lot of investors choose either cash flow or home price appreciation, but one real estate market could provide both. Jacksonville, Florida, with 27% lower home prices than the national median and 1% higher rents, their market has appreciated 34% more than other comparable cash flow markets over the last 30 years. Get positive cash flow today and appreciation for tomorrow. They often have available inventory in Jacksonville. Start at cashflowandgrowth.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Ohio's Lake Erie to Nevada's Lake Tahoe and across 188 nations worldwide. You're listening to one of America's most listened to and longest running shows on real estate investing. My name is Keith Weinhold. This is Get Rich Education, coming at you relentlessly every single week since 2014. Forbearance numbers are falling. Now, what forbearance really does is it allows homeowners to postpone their payments until later in case they lost their job. In the recession, it allows people to put a pause on making their payments, and it was originally passed in the CARES Act more than a year ago. A lot of people are concerned that when forbearance ends, well then, if homeowners can't resume making their payments, that many of them are going to lose their homes. That's going to release a glut of cheap housing supply that could crash the housing market. Now, forbearance technically applies only to loans backed by Fannie Mae and Freddie Mac, or even FHA and VA loan types. But what's really happened here in reality is that a lot of private lenders, they voluntarily extended this forbearance protection as well. Some people that like to make predictions seem to think that upon forbearance's end, the housing market will crash, but you hear fewer and fewer people saying that now that we approach mid-year. Now, why might fewer people be saying that? Well, compared to a year ago, there are only about half as many homeowners in forbearance now. I'm going to do some rounding here. A year ago, the Mortgage Bankers Association will tell you that 8.5% of these loans were in forbearance. And then at the beginning of this year, the number was down to 5.5%. A month ago, 4.5%. And today, the share of homeowners in forbearance is just above 4%. So the threat of an eventual end of forbearance housing crash seems to keep diminishing. One thought leader has pointed out with some pretty good data that the thing that's a greater threat to the housing market than the end of forbearance that could crash the housing market is simply that would-be sellers that have delayed putting their home on the market a year ago, they held back, well, they could start to put their homes on the market now that a lot of people are vaccinated. Part of the reason for today's housing supply constraint is that people kept their homes off the market because they didn't want others walking through their home at a showing because they didn't want to get sick. I think it's possible that those homes coming on the market could help relieve a supply constraint as much or more than forbearance expiry. But either one of those phenomena, I think, could be seen as some of the more ominous signs for the housing market. On the flip side, the bull side, workers are being hired again, and as stimulus payments run dry, more people are then being motivated to return to work. The economy is coming back. And hey, people are finally buying clothing that aren't sweatpants anymore. In fact, the latest jobs figures show that now just 4% of the pre-pandemic jobs have not returned, meaning then that 96% have, as we see this long, slow, Nike swoosh-shaped economic recovery. Remember, markets and the economy are two different things. I have long characterized this as a Nike swoosh-shaped recovery, just about from the beginning here, even though a few economists predicted a V. I never saw a V. It takes time to rematch job positions with labor, and it's taken close to a year here now. Mortgage rates are staying low. Home prices are, yes, actually still more affordable than they were 15 years ago, as I've discussed here before. That is because as incomes have risen over the last 15 years, your ability to buy increases, and as mortgage rates have fallen, your ability to buy also increases. A lot of people only look at the overall capital price of the home, but here you know that it's about the measurement on a consumer buying power adjusted basis, not just that headline price. You know, a couple weeks ago, I wrote in our Don't Quit Your Daydream letter that the 4.2% reported inflation number, which is the most recent CPI number, that should not necessarily be thought of as any sort of new normal, because on the show a couple months ago, economist Richard Duncan told us that a number like this higher 4.2% could be coming. That is due to those low base effects of the suppressed inflation a year ago at this time. If inflation does, however, prove to persist, that increases the chances of you paying higher interest rates for everything. And higher interest rates correlates with even lower housing supply and higher housing prices. And gosh, so many economists seem to get that wrong. I already explained 4 episodes ago why higher mortgage interest rates correlate with higher housing prices. Yes, that is counterintuitive, but in fact, the last 6 times that mortgage rates rose, housing prices rose, not fell. One thing that protects against falling housing prices is homeowners that have a lot of protective equity in their homes. And I have a really interesting update for you on the level of equity that homeowners have now. Just one part of what led to that astounding housing crash of 2008 is that uncreditworthy borrowers, they were very willing to just walk away from their homes because they had little or no equity in their homes to have to protect. Well, it's easy to walk away from nothing. John Burns Real Estate Consulting recently reported that through Q3 of last year, Americans hit an all-time high for homeowner equity, and this is even inflation adjusted here. Do you have any idea what that is? Any guess on the average homeowner equity amount in the United States now? It is $257K. Yeah, that $257,000 is an all-time high in American homeowner equity. Homeowners have really never been wealthier than. It's not something people are willing to walk away from. If they can afford it at all, homeowners are more incentivized to make their payments. That is another factor in today's housing market that I just don't see very many people talking about. And then there's the fact that to have a loan at all, gosh, for about 12 years now, you've got to be quite a credit-worthy borrower. So that's really a roundup of some of the various measuring sticks to help you value how strong you think today's housing market is. Some pros and some cons. If you put all that into a blender, what's the most likely near-term outcome? It's that housing keeps appreciating, albeit at a slower rate. Let's talk about hyperinflation in real estate for a minute. Now, I don't think hyperinflation is coming. That means inflation can be in the hundreds of % per month. Think Venezuela. And even high inflation, not hyperinflation, but high inflation like the 10 to 15% levels that America had in the 1970s and early 80s, that even seems unlikely, at least based on the government-reported numbers. But consider this hyperinflation in the hundreds of % per month for a moment to help you understand credit in real estate. It's like the story of factory workers in Germany a century ago that had to get paid twice a day. They were paid at lunch, and then they were paid again at the end of the day. the employer had to let them off work at lunch for an hour or so that they could spend their money before it lost purchasing power. By the end of the day, it would have lost too much purchasing power. That is hyperinflation. That could actually be good for some businesses because people are really incentivized to spend their money on goods and services before it loses value. But in hyperinflation, understand that no one is going to make a loan to you. Practically nobody. Credit would disappear. Loans would disappear. Bonds would disappear because bonds are loans. If your day job is in the business of extending lines of credit to people, that job would probably be gone too. No one would want to make a loan and have hyperinflation eat away their mortgage note. Banks would cease to make income from interest. They would have to be fee-based. So in hyperinflation, real estate being a credit-based asset, that means you are a super winner, like a mega winner, with all of your properties having their mortgage balance debased to practically nothing. Now, again, very few people see hyperinflation occurring in the United States anytime soon, but that gives you a vision of what it would look like for prudently leveraged real estate investors. Now, I don't talk too much about personal investments on the show here. That's partly because I found that some people will invest in exactly whatever I do, even though our objectives might be different. But because we're in nearly unprecedented times here with what's occurred in this recession along with an asset price run-up, and historically those two things don't go together, let me share something with you. Let's look at some of the main asset classes, and there is two in these lists that I have made new investments in recently. Let's start off looking at real estate. That is one of two assets that I've been adding more of. Yeah, no surprise there. You're paid up to 5 ways at the same time, such that even if values fall, I would still expect to get paid 4 other ways. I am an active real estate investor for all the reasons I discuss on the show. Well, what's the other one? What's that other investment? This second one, it might surprise you. Is it stocks? No, they're overvalued. Is it oil? No, I'm not interested. Is it crypto? Nope, I've got some of that. Is it bonds? No, they're low yield. Is it cash? No. Other than reserves, I want to be out of cash. Savings are low yield. Is it something like silver? Nope, it's too much to store if you take physical custody of it. Is it a platinum group metal, one of the PGMs like platinum or palladium? Those things could be good, but they're not really stores of value, nor are they hedges like gold. What about NFTs, non-fungible tokens? No, I'm not interested in that. What about collectibles? No, I've got quite a bit of experience with that. I tend to kind of get out of control with it. I actually had one of the best vintage football card collections in the nation around 2008 and 2009. And then there's a mild storage burden with collectibles. What about numismatics, like old collectible coins? Nope, I didn't get any of those. There's kind of a steep learning curve there, I feel. What about investing in businesses? No, kind of a steep learning curve there too. How about artwork, like classic art, vintage art? Nope, there's a steep learning curve there. There could be a storage burden as well. It's none of those things. The other asset class that I made a new investment in, besides more real estate, is gold. Yeah, gold won by elimination. One reason that it's attractive now is that just look around. It's one of the very few asset classes that has not surged in price like nearly everything else has in the last year plus. So I added some more last month, and I actually purchased it through Damian Lupo. He actually has a bullion network. You might know him for the person that offers you the EQRP, but I support friends and friends that support us. So you might remember that 2 weeks ago here on the show, Fox News' Kristen Tate mentioned that she favors owning physical gold and silver as something to diversify outside of the U.S. dollar. Now, it's been a while since I discussed it, but a while ago I told you that I held 1.5% of net worth in bullion. Well, with the run-up in the price of everything else, that allocation ran down to about 1%, and now I'm back up to about 2%. And I don't think that gold is a home run. I think gold is generally that wrong type of purchase for you if you are in a strict wealth building phase. If that's you, 100%, then you want a lot of real estate. Gold is like money insurance. I don't favor it because I think it's going to be some valuation home run over the next few years. Instead, it's that stable store of value. It's had value for millennia, and much like insurance, you hope that you don't need to use it. So there you go, real estate and gold. The primaries for the New York City mayoral election are next month. And gosh, some people just really don't understand real estate and the housing affordability problem. When the New York Times editorial board recently asked one of the New York City mayoral candidates, Ray McGuire, when they asked his best guess at the median sales price for a home or apartment in Brooklyn, his answer was, it's got to be somewhere in the $80,000 to $90,000 range, if not higher. That's the end of his answer. Are you kidding me? McGuire is a former Citibank executive, so you think it's even more likely that he would have some clue. He was off by a factor of 10 because the real answer is about $900,000. And for what it's worth, fellow mayoral candidate Sean Donovan, who was actually the former Secretary of Housing and Urban Development, he guessed only $100,000, so he was off by a factor of 9. And this is a recent HUD secretary. I think it was under Obama. Wow. Coming up here on the show in future weeks, we got some new guests. One of them talks about the importance of sales in real estate investing. One guest that we've had on the show here a number of times, Robert Kiyosaki, the author of Rich Dad, Poor Dad, says that every entrepreneur needs to be good in sales. Robert Kiyosaki's Rich Dad real estate advisor, Ken McElroy, and very frequent guest here on GRE, says sales solves nearly every problem. Well, the Rich Dad sales advisor is Blair Singer. He's one of the many new guests that we'll have here on the show in upcoming weeks. Memorial Day weekend is fast approaching. I hope you've got some good summer plans slated now that the world seems to be reopening. I'll be spending my summer in two places, Anchorage, AK, which is where I am today, and upstate Pennsylvania, where I'll be headed next month for a while. Aundrea Newbern runs operations here at GRE. In a few minutes, she and I are going to highlight some areas of a great real estate investing book that we both read recently. We're going to hit the high points for you. But first, right now, what is probably the most important series of real estate investing videos ever is being released, and it's not even behind any type of paywall. It is public, it is completely free, and it's on YouTube. It's a 5-part video series that goes into some depth on the 5 ways that real estate investors are often paid simultaneously. That's something that you've heard me discuss here since about 2014. The video series allows you to really look at the numbers where all 5 return sources really come from. And the free video series is hosted by me. And it is without a doubt the most important thing that I've ever done on YouTube. Some of the 5 videos have already been released. Each one is about 10 minutes long so far. I still have the last 2 to shoot here. In fact, in each of the 5 videos, I wear a shirt color that actually corresponds with each return source. For example, in the first video, I tell you why I'm wearing a blue shirt, which symbolizes real estate appreciation. In the second video, I'm wearing a green shirt to symbolize green for cash flow. In fact, here is the audio from the 5 Ways video series trailer.
Average Joe invested in real estate and became a boss. Ever compared investments and wondered, what makes real estate special? Inflation will be your new best friend, and you'll be increasing income while decreasing taxes because debt-free is dumb, compound interest is lame, the US dollar is fake, and real estate is real. Real estate simultaneously pays 5 ways.
It's the most important video series I've ever created. Check it out on Get Rich Education YouTube right now. I'm back with more straight ahead. You know, starting in real estate seems hard for some. Even experienced investors can find it difficult to achieve the success that they had hoped for. What if there was one small change everyone could make that would solve these challenges? Ali Boone offers a book that really no one else has. It's an easy-to-understand glimpse into the real estate investing industry and your mindset. It's life lessons on hacking your mind before you hack your wallet. Her book to grab on Amazon is called Not Your How-To Guide to Real Estate Investing. Hey, is your IRA in a real estate syndication? Yikes, a 37% UBIT tax could hit you. But you still have a chance to set up your EQRP and avoid this. Did you make too much money in 2020 and need more deductions? Now federal law lets you set up an EQRP in 2021 and get deductions for last year, retroactively. Even put old IRA and 401k money in Bitcoin, gold, or your own business. Get control of all of your retirement money, tax and penalty free. Text EQRP in all capital letters to 72,000.
This is Profit Boss Radio's Hillary Hendershot. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Welcome back to Get Rich Education. Aundrea Newbern, she runs operations here at GRE. It's been a few months since we've had her here on the show. She has her MBA in finance, so therefore more formal education than I. She's an active real estate investor. She's a licensed real estate agent. She does a lot of things. Welcome back to the show, Aundrea.
Thank you so much for having me, Keith. Glad to be back.
So much has changed in your life since you were last here. You've added a family member, and you and your husband and your newborn son are on the move.
That is right. We had our first little one back in February. So a little boy named Jack. So that's been a big life change. And then we just bought a second home in Michigan, which right now I live in Georgia on the coast. And we're going to kind of be going back and forth, living up there part of the year and living down here part of the year. So super exciting.
Jack's a few months old. He's a good-looking guy. You and your husband and your newborn son are going to be spending more of your life in Metro Detroit rather than Georgia.
That's right. Yep. We have a lot of family up there. And so we thought it was kind of the right move for the little one. And I'm also looking at expanding out my investment portfolio up there. So it makes a lot of sense to be there.
You do get more of a change in seasons up there as well. And I can imagine where you can, you're going to upgrade your lifestyle from hardwood floor in Georgia, probably to some carpeted floor up in Metro Detroit. You'll really be living well.
Absolutely not. That is one thing you and I disagree on totally. I have, with a kid and dogs and cats, there's no way I'd have carpet in my house, Keith.
Most people disagree with me on that one. This harkens back maybe a month or two ago to my rant on how a hardwood floor is so overrated and carpet is so much more comfortable. Also, Aundrea, you are doing some more property purchases, including through one of our providers. Tell us about that.
That's right. So I put a contract down this week on 2 different properties. They're tiny homes. One is in Nicaragua. So I ended up going with one of their 2-bedroom models there, just so, if my husband and kid and I go down there when he's a little bit older, we have a little bit of privacy and space between the 3 of us. But I've got that one. And then I'm also under contract for one in Belize, which should be started sometime later this year. And that's a 1-bedroom model there. So I'm really excited about that because they're both great homes, lots of smart features on there. They're eco-friendly, and we cannot wait to get down there and start vacationing there.
Oh, that's right. And on Belize, you have the over-the-water bungalows there, right? So therefore, you can look down through this opening on your floor. It can always be covered with a carpet remnant if you want to, but you can look down through your floor and actually see the water. It is an over-the-water bungalow there in the Belize tiny home.
That's right. It's such a cool area. And, the best thing is not only do we get to enjoy it, we actually get to have renters there. So we're going to be making money off of it too, which I love, of course.
That's right. So expanding the international real estate portfolio, getting short-term rental income during the majority of the year when you're not there. And you indeed bought through GetRichEducation.com/tinyhomes.
That's right. Yep.
Aundrea and I actually buy from a lot of the providers that we talk about here on the show ourselves. And of course, we can't buy through every provider at GREturnkey.com, just like I don't suggest that you do. That would be too much geographic expansion and too many managers to manage and so on. But I just love what you're doing there. So I really look forward to keeping up with you on how that goes on those tiny homes in Belize and Nicaragua. You've heard the provider on the show with us. So if you, the listener, are interested, check that out at GetRichEducation.com/tiny homes. Affordable price points, $100K, $120K for some of them.
That's right. Yeah. The Nicaragua, you can get under $100K, which is pretty amazing.
Yeah, that's terrific. It's not the only reason for buying there, but it's definitely a good one, that approachable price point for some people. So, Aundrea, I know you and I have each read a book here in the past month or two. It's called Not Your How-To Guide to Real Estate Investing. It's authored by Ali Boone, and we both flagged a number of sections in the book that we really like. And this book, I think it's called Not Your How-To Guide to Real Estate Investing because it really covers the what and the why of real estate investing, which is a lot more important than step-by-step how-to guides for doing it all. It's kind of doing the right thing before you do things right. And the author, Ali Boone, I was first attracted to her work because she was a Bigger Pockets columnist. Around 2012 is when I started reading her work. She and I had lunch together in 2014. So tell me about some of your favorite sections of the book.
It was really hard to narrow it down because, like you mentioned, this book is not on the how, it's on, other reasons. And mindset is kind of the key component of this book. And I get all amped up when I read stuff about mindset because I think it's huge and it's a critical component of investing. One of the first sections that really spoke to me was at the beginning of the book when she talks about statistics being kind of a myth and taking data out of context and not necessarily independently evaluating it. And man, oh man, do I see this on almost a daily basis working with real estate investors.
Yeah.
There's one part of that section where she says, and this is a direct quote, you have no way of knowing if you're making the correct interpretation using the information. Really good example that I thought of recently that happened to me personally is I had a very wonderful out-of-state investor, and they were a first-time investor. They came to me and they had done great due diligence on this area. And one of the things that pops up, if you look at this area where I live and invest in, is the crime rate. And when you Google it, crime rate pops up as this being, I think, like the 7th most dangerous city in the state of Georgia. And we're right here on the coast. It's a beautiful area. What people don't know when they look at that statistic is that that is isolated to one little pocket. It's not the entire city. And most of the city is actually crime-free or very low crime. And so if you just looked at this area and read that statistic without any context around it, you're going to think this is a terrible place to invest in when it's really a wonderful place to invest in.
That's a good point. You're talking about the Brunswick, Georgia MSA. And it's funny, a lot of people, they know about their own city that they live in. And, oh, yeah, well, I wouldn't live over in that section of town because that has a lot of crime. That brings down our overall crime statistics. But, of course, I wouldn't live there myself. When someone thinks about another city and they read about that other city's high crime rates, for some reason, they just extrapolate that across the entire city. So your point in Ali's book, which I think are pages 31 and 32, are people oversimplifying some of these real estate statistics.
That's right. And not critically evaluating and saying, okay, there's maybe a little bit more context here. How can I look at this differently? Or what else is part of this picture that I need to look at outside of this one statistic?
Yeah, because real estate is so nuanced, and I think a lot of lay people, including this propensity for these mainstream media columnists to oversimplify, a lot of times readers get the wrong takeaway with real estate statistics. For example, now I haven't read this recently, but I have read columns like this in the past, Aundrea, where a columnist will write something like, Manhattan's really the great place for landlords because Manhattan landlords are getting an average $3,500 rent. Look at poor Kansas City where you only get $1,300, or Memphis where you only get $1,200. So therefore, New York City landlords, specifically in Manhattan, must really be raking it in. And that's the takeaway. Well, no, there's so much more to be said for that. What's profitable for a real estate investor has more to do with the rent to value ratio. And in New York City, it can be difficult to evict tenants and they have rent control there. So there are just so many nuances to real estate investing. And a lot of people broad brushstroke it, especially in the mainstream media.
Absolutely. And that's what Ali goes into detail here about is some examples of that from her experiences, as well as kind of how to get your mindset out of that and evaluate things from a larger perspective.
Another one that drives me nuts that I do still see sometimes is, well, stocks return 10%, and over here, real estate historically only returns 6%. Oh my goodness, you're only looking at it from a capital appreciation perspective, not all up to 5 ways that real estate pays you. So any other favorite parts of the book?
There's another section where she talks about, what is your personal time worth? And she specifically mentions people often favor increasing returns by doing the work themselves. And man, oh man, am I guilty of that myself. When I was a new investor, okay, let me be really honest, probably a little over a year ago, as recent as that, when I was no longer a new investor, I had no idea what my time was worth. I'd never actually measured it. I was doing work at properties that I shouldn't have been, tightening toilet seats, fixing door jambs, occasionally even cleaning a property if the cleaner didn't show up. I think through a combo of this podcast here at my mastermind group, I realized I shouldn't really be doing that. My time is worth a lot more than that. A lot of real estate investors struggle with that and understanding if you really look at what you make per hour and actually average that out, you shouldn't be doing a task that would cost you $50 or $75 to hire someone to do. Ali tells a great story in here about when she was sitting at a pool, ironically in Nicaragua, and she got called by a property manager about an issue with one of her properties. And this story perfectly illustrates how much your personal time is worth if you think about it. And I think that's on around page 95 if somebody wants to skip ahead in the book.
I know that story. I remember reading that in Ali's book. Yes, it's about understanding that it's about your ROTI, as I like to say. What's your return on time invested? In order to migrate to your best and highest use tasks, start outsourcing those lower use tasks right away. It takes a little bit more time to set that up front, but it definitely pays dividends down the road. And it just makes you like and enjoy real estate investing more. A lot of people will trade their time for dollars. There are a ton of people out there that are willing to do that, including property managers. One interesting part of the book that I found that Ali really made approachable is on page 44. It was about overcoming this antiquated mindset of only investing in your local real estate market. And that's how I began investing. I think that's how a lot of real estate investors start. But there is more risk with only investing in one market, even if you happen to live in a good market, which the minority of people do. And that is because your properties in one market are all swimming inside that local economy. And whether it's prone to a recession and how economically durable it is with a diversification of different market sectors. So it's about getting out of only investing in your own market. And it's easier than ever to do that with turnkey real estate providers. Now, the book isn't all about turnkey. That just mentions one of maybe 8 different ways you can approach real estate investing. But a turnkey provider rehabs the property for you before you buy it. They put a tenant in it often before you buy it, and they manage it for you. That's why it's turnkey. And it's just easier than ever to invest outside state lines and even national lines like we talked about at the beginning here, Aundrea. Today, there are online reviews and there are forums where you can get opinions from real people on who's running a good, efficient operation and who manages it well. There are video tours. The first property that I ever bought out of state was in Texas, many states away from me. I bought the property sight unseen. I held on to it for a number of years. I sold it for a profit, and I'll probably never see it. That's just easier than ever to do today. So the point is the book helps you overcome that antiquated mindset of thinking you can only invest in your own local real estate market. If you do, you're limited and you're not diversified.
That's right. And you know what? When I was reading that section of the book, it started making me think about my personal portfolio a little bit more. And a few years ago when I was living in Chicago, I purchased everything I wanted to own in Georgia, in different locations, but in Georgia. Fast forward a year later, hurricane came through. I had several issues with the property, and now I'm looking to diversify outside of this hurricane area because, it would be terrible if a hurricane came through again and wiped out now all of my properties that are here. So it's super important when you think about natural disasters, to your point, economic changes. If you're investing in places like I do too, where there are military bases, what if that military base leaves? So those are all things you have to think about. And Ali has an entire section talking about that brings up some really good key points.
That's a good point. It's not just about economics, but you're bringing up weather or natural disasters or other reasons. In fact, years ago, the real estate investing climate changed in Arizona due to the way that they policed illegals and how that changed. So legislation can sometimes change too. So you want to be diverse. You want to be in a number of different markets because the properties you own are swimming in that economic sea. Any other favorite parts that you had in the book, Aundrea?
There was another section that was around being a control freak. I think it starts around page 104. And, she mentions if you're unwilling to stop trying to manage everything yourself, you may have issues with control. And that spoke to me because I've been a control freak my whole life. And if anything's going to be my downfall, that is it. That's one of the things that I've had to kind of take a step back from the last couple of years, realize I can't do everything myself. A lot of these things need to be outsourced, going back to what is my time worth. And making sure that I'm giving the ability to my team and the people that are helping me manage my properties and investments, giving them the ability to make decisions. And my life has gotten so much better since I started doing that.
Don't be a control freak. That's on pages 104 and 105 of the book in that area. And I started out with that too. Maybe it's because I had an owner-occupied fourplex. Because I lived in one of the 4 units, it really felt like my own. So I got more emotionally attached and therefore more of a control freak than I possibly should have. Now, I wasn't very good at fixing things, but I still remember during vacancies, I would do all kinds of crazy things to make the rental unit have more appeal so that it would rent out sooner. I even remember, Aundrea, getting down on my hands and knees and touching up the brown baseboard with a brown marker with the little chips in the baseboard because it made the baseboard look a little better and shinier. And that's so ridiculous. This doesn't mean that you, as a real estate investor, shouldn't care about the quality of your units. You should, but outsourcing it to a property manager is when my life got better. And with the manager, hey, 98% of perfection is good enough. I can still provide housing that's clean, safe, affordable, and functional. So when it comes to not being a control freak, I think it comes to not being too emotional about your properties. I reserve my emotions for people more so than stuff. Aundrea from Operations here at GRE and I are talking about Not Your How-To Guide to Real Estate Investing, a new book from Ali Boone that we really like, and it really helps you understand the what and the why of real estate investing more so than the how. One part I liked, Aundrea, is where Ali talks about the power of passive income on page 53. In short, wealth really is your ability to do whatever you want to do. And with the power of passive income, Ali lays it out here really well. I mean, this is the point. This is why we're investing in real estate. A lot of people think passive income is a myth because they came up conventionally in the school system and they think that you have to trade your time for dollars. But Ali talks about here, this truly means that when you get enough passive income from real estate that you can do whatever you want to do, that you don't have to show up at your day job and passive income replaces all your expenses, you can live wherever you want. You can sleep in as late as you want, go to bed as late as you want, volunteer when and where you want to, try new hobbies, learn new things, travel anywhere you want. So it's really helping build part of the compelling why in the book here.
That's right. And I think this is probably one of the top conversations I have with people that I'm consistently trying to convert over from the stock market or other investments to real estate. And when I mention the passive income aspect and even show them numbers about, I don't want to say how easy it is to invest in real estate and make that passive income, people constantly say things such as, well, I don't want to be a landlord. It's a lot of work. Yeah, but you're going to your day job that you absolutely hate every day until you're 65 years old. That's so much worse than being a landlord or having a property manager.
What's funny, Aundrea, real estate investing, it's not completely passive, even when you have a property manager, but it's pretty close. But you bring up the whole work angle. Here's the thing. When people go to work at a day job, 90% of their time might be active work, and only 10% of that job might be passive, meaning it's maybe 10% of days where you either have a holiday or a vacation day. So therefore, your day job is often, say, 90% active and 10% passive. But owning rental property and having a manager manage it, that might be like 98% passive and only 2% active when things come up once in a while. When your property manager emails you and asks you to make a decision like, well, hey, do you want to repair this dishwasher for this tenant or do you want to replace it? I mean, that doesn't really take too much time or mental bandwidth. So real estate investing, even with a manager, isn't completely passive, but it's pretty darn close. And you can return that email the next day from Nicaragua if you want to.
Exactly. Another area that I really like, because this is something I had to kind of dig into my core about a couple of years ago, is what is your why? Ali mentions kind of digging deep to understand why you want to invest in real estate. And so as an auditor by profession, prior to being here at GRE and being an investor, I would often do something called the 5 whys. You know, when presented with a problem or issue, ask why 5 times. For example, why did I want to invest in real estate? Well, I want to make a lot of money. Well, why do I want to make a lot of money? I want to be able to buy and live where I want. And why do you want to do that? Well, I want to have fun and live in a location I enjoy. And I want to do that because ultimately it brings me closer to my family and its experiences and memories that we're creating together. So that's why I want to invest in real estate. It gives me the passive income to be able to do that. And Ali has an entire section in this book about that. It is very thought-provoking.
I like that about asking yourself why 5 times and really drilling down. That's probably going to bring something out from inside you that you didn't even know was there, where you can give yourself a better answer. What is your why? That's on pages 134 and 135. It really doesn't get much more important than that. I like how on page 142, she addresses guru seminars. The common frustration with guru seminars in an extreme case is a person might say, oh my gosh, I paid $20,000 for a course on house flipping. The flipping didn't work, and yet they kept my $20K. First of all, today you don't have to pay $20K for an education. You can listen to free resources. You're doing that right now. But oftentimes the way the guru seminar industry works is something like they might have a free live event on a weeknight, and they'll give you some good information at that event, but they'll also try to upsell you on something. They'll try to get you to that $495 weekend seminar. And at that $495 weekend seminar, they'll give you some good information, but they'll also try to upsell you to the $5,000 intensive course, where at the intensive course, they might try to upsell you to the $20,000 master course. So as long as you know what's coming, there's usually some good information at those guru seminars. Some are scams, but most are not. I think the bottom line and the most important takeaway I can give you, the listener, about what I think about guru seminars is, in general, they work if you do. You can't just take in the information and then not act or not do some of the work. So guru seminars work if you do.
That's right. And Keith, I think I've shared with you before, I started listening to your podcast many, many years ago before I even started investing. And at the same time, I started listening to your podcast and all these resources out there. I also went to a guru seminar and paid for it. What happened was, within 30 minutes of being there, they immediately tried to upsell one of their products and courses. They have another guru come on. They try to upsell their product and courses. I got up and I actually walked out in the middle of it. I don't think I learned anything from it other than they're trying to pitch me and sell me on things that are going to cost me a lot of money. I learned so much more from listening to Get Rich Education and other podcasts and free resources and reading books like Ali's.
Well, thanks for telling me that. This is kind of like the seminar that comes to you and is convenient for you to listen to whenever you want to. I think the last thing I want to bring up in the book is on page 168. It really does a good job of just laying out all the investing type differences and why you should or should not be interested in those based on what your interests are and where your inclinations are and what your skill set is. So it really just gives a good overview of what turnkey real estate investing is, what's buy and hold, buy and rehab, the BRRRR method, flipping, wholesaling, landlording, property management, and all those sorts of things. So it really helps lay out those investing type differences. And are you even in the right lane in real estate investing at all? We all know real estate investing has made more ordinary people wealthy than anything else, but I think the book really helps you figure out where you want to get in.
It does. And, a lot of people, I think, don't even realize that there are so many ways to invest in real estate. And you can kind of learn about all these different methods and find out what works best for you. I did that myself. I've went down a couple of different routes, and now I know that I really enjoy single families. I'm starting to like turnkeys a lot more. I used to like doing big rehab projects. I don't want to do that anymore. I don't have the time for it. So this chapter is really good in helping you kind of understand what all those different areas are and kind of how to evaluate or why to evaluate which one works best for you.
You have any last thoughts on the book? You have one more favorite section, Aundrea?
Probably my favorite section of the whole book is the one talking about making a move. The number one reason from my perspective why I think people often aren't successful at real estate is what I call and other people call analysis paralysis.
Yeah.
And you just do it. Go out there. You have to make a move to be able to be successful. Even if it's a small step, small steps are still steps towards your goal. Towards the end of the book, Ali devotes an entire chapter on this, but I've been at conferences or even on podcasts where they've asked me what I think the key is to success. And 100% without a doubt, it's make a move and do something.
You can't make any money from the property that you don't own. That's what I always say. So I think this book really caters well to two groups in particular, though it can go beyond that. Number one, if you're a beginner or you're just kind of early on here in the real estate game. Or secondly, if you've been in some form of real estate investing or active real estate participation, but you think you're in the wrong lane or you're not as profitable as you think you should be, I think it really helps you figure that out. The book costs $15 plus a few hours of your time. It's a little over 200 pages. And that really is a remarkable value when you can get all of Ali Boone's accumulated knowledge and experience just right in your lap. And she really writes in a conversational, relatable way. There aren't any words in the book that you're going to need a thesaurus for or a dictionary for to figure out what they say. It's just really an easy read. And it basically makes you more than the time that you invest in the book. I think the easiest thing for you to do, since it has a long title, Not Your How-To Guide to Real Estate Investing, if you're potentially interested in the book, is just going on Amazon and searching Ali Boone, Aliboone. Aundrea, it's been fun talking about this book. There are so many points that really connected with us. It was great having you back.
Thank you, Keith.
Oh, great stuff from Aundrea. We expect to have author Ali Boone on the show here later this year. Next week on the show, we haven't talked about it in a while. In this housing supply crisis that America is in, what kinds of disruption and inroads has 3D home printing made in the housing construction industry? In the meantime, if it sounds valuable to you, I think that the easiest way to find the book that Aundrea and I discussed is to go to Amazon and search Ali Boone. Also, it's the most important video series I've ever created for the 5-video series on the 5 ways that real estate investors are really paid. Check it out on Get Rich Education YouTube right now. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.